Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. I hope you're getting excited about this week's trading because I am. The week is filled with swans and potential landmines for our predatory short hedge fund friends. Let's kick it off with an article from Zero Hedge. Headline: It's spooky. Stanford professor warns thousands of U.S. banks are potentially insolvent. From the article: following the collapse of First Republic last week, the meltdown of three other banks, and the Fed Reserve's quarter-point increase, making the 10th straight hike in an aggressive campaign to tame elevated inflation, a professor of finance at the Stanford Graduate School of Business presented a grim warning that the regional banking dominoes are falling. In a New York Times opinion piece titled, "Yes, You should be worried about a potential bank crisis. Here's why," Professor Amit Saru wrote, quote, "The fragility and collapse of several high-profile banks are most likely not an isolated phenomenon." He said, "A damaging combination of fast-rising interest rates, major changes in work patterns, and the potential of a recession could prompt a credit crunch not seen since the 2008 financial crisis." Now on Friday, the S&P 500 closed up 1.85%, the Dow up 1.65%, the Nasdaq up 2.25%, the Russell up 2.39%, crude oil up 4.03%. Keep an eye on that. But the article that caught my eye from MoneyWise at Yahoo Finance, quote, "It's going to be ugly. This CEO is issuing a dire warning about U.S. real estate, saying areas will be destroyed." And from the article, the commercial real estate market is tumbling toward a crash that could be as devastating as the 2008-09 crisis, according to the CEO of a real estate investment firm. Patrick Carroll, founder and CEO of Carroll, sounded the alarm about the state of the U.S. commercial real estate market in a recent interview with CNBC. Quote, "The party's over, unfortunately," he said. "The market's going to be destroyed. Hotels are going to be destroyed. It's going to be ugly." Guys, get out your calendar and get ready for Wednesday. From Wall Street Breakfast, the April CPI report, due out on May 10th, is the headliner event of the week, with economists forecasting a 0.3% month-over-month increase in inflation for the month and a 5.5% year-over-year gain. Following up the CPI print, the latest update on producer prices will be released on the next day, May 11th, to also give inflation watchers another talking point. Seeking Alpha analyst John Matson said in his breakdown of the recent Fed Reserve meeting that the FOMC members are staying right on track in the fight against inflation, but pointed to other variables in the mix, such as a weakening U.S. dollar and bank liquidity issues. Where is Uncle Frank on the matter? I am hoping for a surprise on inflation to the downside to build on these recent rallies and to take the predatory short hedge funds by surprise. Here's me rooting for a face-melting rally midweek. And here's another opinion from another contributor at Seeking Alpha. Energy prices are likely to have risen during the month, and food prices are not anticipated to show the deceleration that they did in March. Airfares and healthcare insurance are two categories expected to see a month-over-month decline. Seeking Alpha contributor Craig Earlham contended that core inflation, which strips out the volatile food and energy prices, might only slow a bit. but that should start to fall more quickly in the coming months as the housing lag will better reflect softening rent and home prices. And if that wasn't enough, we should be watching Disney and the debt ceiling. Headline from Yahoo Finance: Inflation, Disney, debt ceiling. What to know this week. From the article, key inflation data, quarterly results from Disney, and an increasingly contentious debate over the looming national debt limit await investors in the week ahead. For investors, Wednesday morning's Consumer Price Index report for April will be the week's biggest release, with markets looking for signs of a further slowdown in consumer prices. Now, guys, this is the chart that's got Uncle Frank excited about a possible surprise to the downside on inflation. This chart from Yahoo Finance is titled, Inflation Continues Cooling Down in the U.S. U.S. Consumer Price Index, year-over-year change since 1970. You could see on the right, that chart is hooking sharply down. Maybe we can get another print that way. And now shifting to AMC, things couldn't be more exciting in the theater and movie business. Check this headline from Variety. The Super Mario Bros. Movie smashes $500 million at domestic box office. From the article, Wahoo! The Super Mario Bros. Movie crossed $500 million at the domestic box office, becoming one of only 19 films to ever surpass that benchmark. Yeah, the theaters are dead. At this point, the animated video game adaptation from Universal, Illumination, and Nintendo is the highest grossing movie of the year in North America with $518 million and globally with $1.15 billion. Congratulations. And another amazing headline from Sunday, right on the heels of Super Mario Bros. From Variety. Box office, Guardians of the Galaxy 3 kicks off summer movie season with $114 million debut. And for you yes voters that doubt Uncle Frank and believe that I'm against the company, I already got my Guardians of the Galaxy popcorn tin, my collectible tickets, and a commemorative mug for Fast X. And our number one competitor in the United States closed another one. The abrupt closure of Hookset Regal Cinemas on Thursday has left Concord residents wondering about the fate of the company's Loudon Road location. Why am I telling you about it? Because the Concord location was not on the list of expected closures, but neither was the Hookset Theater in New Hampshire. And I've got something for you Mullen fans from Quiver Quantitative. Look at that whale activity. 4 closed, 6 decreased, 22 held, 12 increased, and 16 new. On Friday, Mullen managed to close at $1.50, up 2.04%. But then in the after-hour session, it rose another 7 cents, or 4.67%. Now, based on that last price of $1.50, we've already gone through the first resistance point for Monday at $1.54. So be looking for resistance at $1.59 and $1.65. And even though the whole world rallied on Friday, short sellers managed to push AMC down to a closing price of $5.89 after an amazing earnings call, down 0.51%. The Ape finished flat at $1.56, bringing the combined price of AMC and Ape to $7.45, down 0.4% on 35.6 million shares traded. Now, based on that last price of $5.89, be looking for support to the downside at levels 566, 544, and 521. To the upside, be looking for resistance at points 611, 634, and 656. Now, over the past 24 hours over at Reddit, AMC has moved into the 6th position with 150 mentions, which is up 5%. XRP is in the 11th position with 83 mentions, up 108%. And speaking of Ripple XRP, XRP Flare United posted from Blockchain Daily just in, reportedly Ripple and the SEC to hold an undisclosed meeting on May 8th from an unconfirmed source. And in former ape news from Yahoo Finance on Twitter, amateur trader Matt Coors said he lost nearly $30,000 betting on the recovery of First Republic. Burnt by the trade, the 28-year-old decided it made more sense to bet that regional lenders would decline. No comment. Now, these are the kind of headlines that keep me going, and I'm going to close with it. I want you people to know you reap what you sow. From Forex Live, UBS is already thinking about selling Credit Suisse. Now, I want you to think about that. This is the bank that was short AMC. This is the bank that put a 95-cent price target on AMC. This bank was founded in 1856, right? It closed Friday at just under 87 cents. Reuters reports that UBS is reviewing options for its recently acquired Credit Suisse takeover, including keeping the investment bank and selling the rest, potentially via an IPO. Guys, what goes around comes around. I told you. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.